Okay. All right. Welcome, everyone. It's Thursday, about 4 a.m. here. Prices of BTC currently at 71.07. I decided to do a live session early in the morning on December 19th, 2019. So let's get to it, okay? So first things first, what we're seeing on the 15-minute chart is obviously, if you were not present or you just sort of walked into the market the last couple hours, what you've seen is basically bottom and a reversal being created and this big sharp movement up, okay? And if you go back and read my Bitcoin analysis, right, again, I'd stated for the last day or two, I'm not trying to toot my own horn or anything, but I said that if there is to be a reversal or a sort of a big movement back up, it's probably going to be in this area, and it will probably be due to the fact that we've swept these lows right here, okay? So when prices started to sort of push down right here and when prices started to push back up, right around 67, 6,800 is where I started to become bullish. I definitely cannot say that I became bullish right here. That would be a lie, okay? But I said this would be the area to look out for because this is a clean sweep of this low from 3 weeks ago, okay? So anyway, you can read about that in the Bitcoin analysis section, all right? Now, why am I mentioning that? Okay, so there's a couple of different factors that I was paying attention to, given the fact that, why was I pinning this as a potential reversal? All right, well, number one, we swept the lows right there, right? What that means is once you sweep the lows, okay, remember that this was the last bit of movement that helped propel us on November 24th from 6,600 all the way up to about $7,800. So it makes sense that there was a lot of liquidity and stops set right below that area. Okay, so if I was a big player in the market, I know for sure that whether you got into longs right here, or even over here, your last sort of dead stop for your long position is down here, okay, below this wick. And so if you were a liquidity hunter and you were looking for a massive amount of vacuum of Bitcoin to be handed to you, what you really need to do is pressure prices down, right, and then grab all the BTC that's available that's coming down from here all the way down, and especially this area right here. Remember that because this market is not that big in size and it does not have that much liquidity, it's not that hard for bigger players to sort of pressure the market down, okay? So I can almost say for certain that there's either one individual or multiple individuals or maybe an institution that dealt with sort of this pressuring down, pushed this thing down here, and then created this move right here. It was almost a very smartly engineered move, okay? And now I'm gonna prove to you how I know that. All right, so watch this. Okay, so we're gonna go to the BTC USD longs, all right? And we're gonna go to it on the daily. And I'm gonna split the screen with the shorts. Okay, so there they are, right? Now, I want you to notice one thing, okay? Notice right here, November 23rd, okay? This is where the longs start, right? And so let's go to November 23rd. Where's the price on November 23rd? November 23rd, the price is just bottoming out right here. Okay, so the price is just bottoming out. So this entity or this person, right, decided to start loading up on longs from the start of November 23rd. So basically from start of this date right here. So this person, right, let's just say he's a person, not an institution. So this person knew that for the most part, price will come down to a bottom soon, okay? Not only that, it may, for the most part, go up, but probably come back down again. And this gives this person another opportunity to load up on longs because he grabs the liquidity from below this wick, which is, by the way, when you have a push up and a bottom being created here, and it goes up all the way here, right? There's much more liquidity trapped in terms of longs right below it, okay? Because now you have people who are essentially looking to short this whole thing because people are saying that, okay, well, it looks like Bitcoin is topped. You know, people are so engineered to sort of keep shorting because, you know, this was a lower high, lower high, lower high, another lower high, and another lower high, right? So they were almost engineered to keep shorting. And while you are shorting, remember, for every short on one side, there's a long on the other, right? So while there's someone shorting and shorting and shorting, that one entity right here is collecting all the longs up here, okay? So what is the point of collecting the long? It's just much the only player in the market who has the cojones to do so, right? You get to sort of engineer the movement back up once you hit a critical support area and you've collected enough asset, okay? Again, due to the lack of liquidity in this market, right, it is much easier for people with the, I don't know, $50, $100 million to sort of turn this market around and start pushing it up to unfathomable prices in less than 24, 48 hours. Kind of like we saw over here when everyone, you know, was saying that, hey, we're going to go lower and straight down to 5,000, right? What really happened was people over here capitalized, people over here, what's going on? People over in this area capitalized on that fear and, you know, bearish sentiment, and they collected this asset once this low was broken, right? So this was all trapped liquidity, and boom, it's just a rocket ship, you know, going straight to the moon, okay? Same thing happened right here, all right? So this person right here is basically capitalizing on the fact that no one in the market is thinking that we can go up. And even now, people are still sort of under the pretense that we have to go down. If you notice, whether you go on crypto Twitter or any other social media medium, right, you will see that people have sort of forgotten how to be bullish. And that's the perfect time for people like you and I to be bullish. I'm not saying that we always have to be contrarians, but the market is so well positioned in its structure that why would you not want to be bullish when the lows were swept, right? So that's number one, okay? Now I want to show you something else. Number two, all right? Where's number two? Here's the TD, okay? Remember, the TD gave you a 9 right there. Let me move this back up a little bit. The TD gave you a 9 just 2 days ago, right before this reversal. So it could not have been more perfect in terms of this exhaustion to the downside. And remember, look right here, the TD actually gave you a reversal on the 13 right here as well. Okay, so not only did it count this reversal right here, but it gave you another one right here with the lows being swept. Okay, so pair that with the fact that TD9 as a buy signal, lows being swept, longs building by someone who clearly has the balls to keep buying, right? If this person can buy in the face of adversity when the market is going down, then you need to start paying attention, because this person does not give a hoot of what direction the market is going in, because this person has enough money to turn the market at will, okay? So if that's the case, right? If that's the case, okay, now what you want to see is shorts sort of, you know, building back up. You don't want to sort of see shorts just falling off. You want to see shorts pull back a little bit and start climbing again. You know, give it more, give them more of a hope that, hey, you know, price of BTC has topped, right, in this particular area, and that it will go down. And so when those people are shorting, what will cause them to sort of force their hand into a losing position? Well, when price appreciates, right? So the people who are shorting right now, or the people who shorted the top, unless they've taken profit right now, they're soon going to be in a losing position. Why? Because again, I firmly believe that prices are going to appreciate more. Now, why do I think the prices are going to appreciate more? And why not just stop here and then go down to, you know, 6,000 or 6,500 again, right? Well, that's a good point, okay? If I was an entity that was building my long position from November 23rd all the way till now, right? And I probably haven't stopped yet, okay? What I want to do is not capitalize on just this $1,000 move candle. I think what I want to do is I want to position more and more traders to keep shorting, okay? And I know as this entity right here who's building my long position that I have enough money and asset to keep driving the prices up. And while I drive the prices up, the shorts, whether it's in this area or people who shorted down here, or even people who shorted in this, mid region of the candle, are going to be forced to close their position as prices push up. And guess what happens when they get to when they're forced to close out their position? Well, what really happens, folks, is that, remember, for every long, okay, there's a short on the other side. Don't pay attention to these numbers, okay? This is just misleading. For every long, there's a coordinating short on the other side, okay? So when you are closing your shorts, you are covering, okay? Covering is a word that says, okay, if I'm going to close out my short, I need someone to buy my long, right? And so when that someone is buying your long, right, they're basically helping fuel the fire in the market. So basically you create a vacuum in supply, right? And the demand push of the asset becomes much easier because there's not that many people sort of holding the price down or holding the price down as resistance. So all you have is just easy demand slicing through the lack of supply. And that's why you see a big propulsion in price like this. Okay, it's not because there's massive amounts of money in the market. It's because there's a discrepancy between demand and supply. Okay, so when you have the discrepancy between demand and supply, and because people are being forced out of their short position, they don't have sort of resistance, quote unquote, being built up, right, to hold down the price. What that does is it creates, a vacuum in supply, and then it makes the demand that much easier to keep slicing and slicing, and then eventually you get a pop like this, which is a $3,000 move, right? And that's why I believe that we are not, at least in my opinion, not anywhere close to being done with this move, okay? Now let's just say I'm wrong, okay? It's very possible that I'm completely wrong and that was the top, and I didn't get to sell the top around $7,400, $7,500, right? Boo-hoo me, right? Okay, so what are the cases where I could be wrong? So let's get to it, okay? So here's the 4-hour time frame, all right? Actually, let me pull up a different chart. By the way, are you guys following me so far? Has the explanation been kind of helpful? Let me know, because I sometimes just ramble on and I don't ask interactive questions. Okay, yes. All right, awesome. Good to know. Okay. So let's get to it, all right? So I'm going to pull up the 4-hour chart. BTC moving now. Yep, Bitcoin is moving, so that's not a surprise, right? I fully expected, Bitcoin to keep moving. Like I said, I really don't expect it to stop anytime soon because, again, if I was that large player in that market, I don't think I would want to just settle for $1,000 move. But anyway, so let's get to it, right? So first things first, let me get to the 15-minute chart because this is kind of visible right here. And we're going to turn on the pivots, okay? So on the pivots, I want you to notice one thing. Notice that on the pivot right here, we bounced off this key pivot right here and boom, we shot off, right? So that's number one, okay? Number two, this was sort of the last bit of consolidation right here around 71, 7,200 before that big push up to $7,400, $7,500 area. So it makes sense that if we are going to sort of come back to any area, it'd probably be that area. We've also swept the lows of this area right here. So that means any person who got into this area, they probably had their stops right there, and those got swept right there. And that's why you're now seeing a big push up in price, okay? So the asset that needed to be collected from the FOMO longers up here, or even up here, has definitely been collected because a lot of people, they just don't know exactly when to get into the market. They don't know how to set their stops appropriately because they're overexposed to certain direction in the market or they're over leveraged. right? And so when you're over leveraged or you have a heavier position than you should, your stops are much tighter. You don't think with technicals, rather you think with emotion. Because say, for example, you bought the top right here. I mean, you're going to basically shit your pants when prices drop all the way to 7,050, which is this pivot right here. That's almost, a $400 drop from this area right here. And even if you bought in right here, you would probably think that, if your stop got hit, you're not going to have the guts to get back into a position again anyway, right? So for the most part, those people got liquidated. They handed their asset to the big professional that I told you about. And now there's a possibility, right? So I said, where could I be wrong? Okay. I could be wrong like this. Okay. Prices come back up, whether they hit the $7,200 area and then pull back down under the pivot. Okay. So I could be wrong there. Prices could move up to about $7,300 area right there and then pull back down again. So that's the second area that I could be wrong. Okay. Now let's start going on the higher time frames, like the 1 hour. Okay. Next area I could be wrong based on the 1 hour is this little bit of consolidation right here. This is around 6,800 and some change. Okay. So if prices sort of push up and then pull back down here, all right, once prices start breaking under this area, yes, this could be an area that I could be wrong, and then prices could definitely dump down much further. Okay. So that is a very high possibility as well, right? By the way, I haven't sort of ruled out these possibilities that, prices could have topped right here and they could now be going back. And this could have just been, sort of the end of the short squeeze, right? And now it's the time for the bears to take over and dump the price, okay? I always try to figure out as many situations as I could be wrong. So that's another scenario, right? On the 4 hour, this is where things get interesting. On the 4 hour, I've got a bit of a ways to go in terms of being wrong. And this is really the area that I want to look forward to for price to sort of come back to, okay? If worst case scenario, right, price comes back, I want to see this area hold, okay? So where is that area? Let's mark it out, right? So the bottom of the wick right there is, crap. The bottom of the wick right there is about, let's just say 68.50 or so. And the high right there is around 69.35. So let's just say $100 range, right? So if price were to sort of push up and then come back down, I want to see this area hold, okay? This is by far one of the more key areas that could be of big detriment if it does not hold, okay? We're not anywhere close to it, luckily, so we don't have to worry about that, but it's something to keep in mind. Now, alternatively, say prices do come back down into this area, okay? If I were a betting man, right, I would probably want to buy in this area, okay? Because this was a key area right here, as you can see, that helped fuel that big drop off and then a big push back up. So more than likely, there's some big players watching that same area right around here that are going to start putting up their big positions just in case price does come back down here. And they're going to defend that with pretty much all their strength, right? So this could allow a big propulsion back up, okay? Aside from that, now if we start going to the daily, okay, the daily, we've pretty much hit the demand on the daily, okay, as you can see right there. About, as high as 7,200 and as low as 7,000 flat. Okay, so we pretty much hit that area, and notice, the wick is coming back up higher. We should start climbing back either today or tomorrow's candle. You don't want to take too much time in this area because you want to also keep that bullish momentum high. Okay, and that bullish momentum will again do two things, right? In this 1 day, or maybe even say 2 days of another candle right here being printed like this, it will add a lot of positions for shorts. Because remember, like I've said, people are now sort of engineered to short every single rally, okay? But one thing they're not understanding is the structure of the market and the amount of, and rather the context of the price structure as a whole. Given the fact that, like I told you, the lows were swept, TD signal was selling, or I'm sorry, giving an exhaustion signal on the sell side, meaning that it's a buy signal, right? There's a lot of signals of confluence that were already telling you that, hey, we should see a potential reversal. And also the fact that there was someone building up a big long position for the last month. So if those three big signals are not enough for you to understand that maybe, just maybe, there's someone out there who wants to push this thing higher, right? Then I don't know sort of how to convince you, right? Those are really the only things that I have in terms of my arsenal to, sort of gauge that the market should be going higher. Now, it doesn't mean it has to, right? Like I said, I could be wrong, and I told you the areas that I could be wrong. But again, I'm willing I trade on the fact that I have three big confluence signals of the lows being swept. Number one, now a big bullish engulfing candle right here. Okay, the TD buy signal, and the fact that some entity is building a massive long position, and also the fact that the the shorts have still not capitulated. So when you start seeing the price starting to drop, right, and the shorts have basically, or rather the price starting to keep rising and the shorts have basically stopped shorting, because remember, I mean, this is a lot of shorts that are built up over the last 3 or 4 days. We had a 90, actually almost 105% increase in short positions. Okay, and so far, right, we've only gone down 25%. So there's a lot more pain to be inflicted on the shorts. Okay, now you could make the argument that, hey, isn't Bitfinex sort of a smaller exchange now? Doesn't BitMEX rather control a majority of the volume? That's very true. Okay, but remember that when there's a player like this in the market, right, he is not so dumb to sort of just accumulate the longs on Bitfinex for no reason. This person is probably hedged in the futures markets, whether it's the CME or backed, or he or she is probably hedged in BitMEX itself. Okay, no one is this dumb to waste this much amount of money without having the proper backing to sort of hedge their positions, whether it's the futures markets on the CME futures or BitMEX. Okay, so the point is, lots of pain to be caused on the shorts. Longs are still building. Price is still not done, in my opinion, right? You have a lot of factors already telling you that the lows were swept, a temporary bottom was created. Now, again, I'm not one to say that this is now the start of a new bull market. I personally don't believe so. But just in case I'm wrong, right? Where would I be wrong again? So let's look at it again, right? So if we're on the daily, right, I need to see what I showed you guys last time, right? When prices came back up here. I need to see this initial point of breakdown, right, be broken as a clean close on the daily. Okay, so I want to see a full daily candle open and close above this area. All right, and that's about the $10,000 level. We are far from it. Even over here, we wicked into that and then sold off. Okay, so it's a high possibility that we can get all the way up into this area and then sell off again, because this is clearly an area where there's a lot of supply probably still left. Okay, so those are my thoughts, right? Where could I be wrong? Now you understand. And by the way, okay, here's another reason why prices could appreciate much higher. If I'm looking for pushing the prices up higher, there's a key sort of resistance level that the 200 moving average that has been playing, as you can see right here, right? That is right around $9,300, $9,400. Now, I'm not saying that price has to get to that level. I'm saying that look at the ceiling and the difference between the 200 moving average, which is a major moving average in Bitcoin price action and many markets, right? And look where the price is right now. So think of the ceiling that you have from current price action to the 200 moving average, which is a key technical level, and look at where your stop can be. So even if you were, say, trying to buy Bitcoin at a spot position right now, okay, so what's your R? Okay, So you have your R right there, okay? So you say your stop is just beneath the wick, okay? And you're aiming for that 200 moving average, okay? Your risk to reward ratio right now is 2.92. That means you're risking $1 down here to gain 2.92, okay? That's a pretty good R. Whether you want to agree with me or not, that price could appreciate back up. I mean, based on the daily time frame, you're kind of risking, say $1,000 to make 2,900 bucks. Okay, so again, I mean, there's a lot of factors that are kind of giving you signals, why this could be a temporary bottom, right? I'm not one to say that, this is the start of a bull market, but I knew for the most part that there were enough in terms of that, this could be a temporary bottom, okay? And you can see right here, my general targets, I mentioned this yesterday morning before, any of the move even happened, right? 7250 was my area that I was watching for the CME gap close. That was another area. And then 8200 is also another area for a daily initial point of breakdown. So let me see exactly where that is. First, let me take a question. Let's see here. Amal, could you use the tool for a opposite in the for the position in the opposite direction? Oh yeah, for sure. Okay. Okay, I think I see what you're saying for a short position. Okay. So actually, that's a very fair argument, right? So say I'm wrong. Okay. So say, you want to go short. Okay. So you're probably targeting, these lows right here, right? Because this was essentially the low that got put in before that big spike up. So if you have your stop right above this wick, the high of this wick is around 74.44. So let's just say 7,500 is your stop, right? You're targeting the low of this candle right here, which is around 64.30. Okay, that's a pretty good risk to reward ratio too. So it's very possible that you could make a trade in either direction right now. I guess the better argument, the statistically better argument in terms of just technicals is that price hit a critical trend line kind of like this, right? So that is the trend line, right? And this is more of a shortable position. I hear you. And I honestly, I cannot say anything against that, okay? But like I've said, once you sort of understand the context of why this move happened, why a majority of the traders, if you look across crypto Twitter, if you just turn on your Twitter, go anywhere, people are now conditioned to short everything, right? That enough sort of makes me want to take the other side of the bet, which is that what if there's something, to this player's movements? What if this person does not just want to stop here? He or she wants to capitalize on the fact that people are positioned and trained to short every rally. Okay, that would be the perfect fuel to the fire, because all this person now needs, right? All this person right here now needs is to pull the price back just a little bit, take the foot off the gas pedal, get more shorts trapped in this area, maybe pause here for a day or two, and then slowly start grinding back up. And while the price keeps grinding back up, remember, most people are going to think, oh, hey, I get to short at a better price. I get to short at a better price. Short and short and short until people realize that, holy shit, prices are in the 8,000 region already, and then they're deep underwater because they kept shorting from here and here and here and here. And then before they realize it, they're very close to their liquidation point. And then remember, while prices are going up like this, right, more people are short covering, meaning that people who shorted in this area, this body of the candle right here, they're already sitting in losses right here. So they're sort of praying for prices to come down, okay? But if prices don't come down and prices keep going back up, okay, these people have to short cover. And remember, like I said before, short covering means that you are basically trying to sell your long. So you're technically just buying, or you're trying to sell your short, meaning technically you're buying a long, which again fuels the fire for this price movement to keep pushing back up. okay? I hope that makes sense. All right. How long could you use the tool? Okay, when you use the short tool, why did you choose a very close high for your stop loss? How do you typically know how far back to go? Okay, so that's a very good point, right? So there's a couple different ways to sort of look at levels for stops, and you can call them invalidation levels, right? Invalidation levels can be seen a couple ways, okay? So let's dig into the market on smaller time frames, right? So we have a 4-hour chart right here, okay? Now, if I'm shorting right here, right, one could make the argument that, you know, the best place to put a stop is above this wick high, because chances are, you know, if prices to kind of move back up, it might actually go even higher, okay? So why do you want to take the chance on a deeper stop when the market, by the way, is already moving against you? Now remember, this is a trending market to the upside for the last day. So you want to be careful of setting deep stops, all right? Deep stops as in, you know, having a stop around 7,900 if you're shorting here. I mean, technically you could definitely do 7,900, which is above this high right here, right? Because statistically, right, we have not been able to surpass this high, okay? So the best stop technically would be above this high. The more conservative stop would be above this high. And say you get stopped out right here, right? Chances are prices may push up even higher, and who knows, you might get a better entry up here, okay? Because again, we did not surpass this level right here, okay? So having your short position be closed out here, only for you to open another short up here is probably statistically the better bet, because getting stopped over here at a loss is much better, okay, than having price push up all the way up here and, you know, not knowing if this high is going to hold. Because remember, again, you are now facing adversity in terms of the trend being shifted in the opposite direction. Given the knowledge that we have now of this long position building, given the fact that the lows were swept, and also the TD9 giving you a buy signal. So it's really, you know, what kind of technicals do you want to pay attention to? I mean, it's very possible that, you know, we cannot get past this high, because this is basically, you know, a big trading range that we've had, right? Let me pull up that chart real quick. Okay. This is, you know, sort of that big trading range, right? We've had the trading range from this particular area, kind of like this. So let me draw the parallel channel. So this is really the big trading range that we've got. Okay, so let me make this a different color, and oops. All right, so that's your big trading range. So yeah, statistically, I mean, you know, the odds are actually in your favor to have your stop above this wick high right here, okay? But do you want to be in a loss from 7,100 or 7,150 all the way up to 7,850? Probably not. I would rather get stopped out above this wick high. Hey man, we can see your video, but I see that you're driving, so drive carefully. Okay, so anyway, we could see that, you know, this is the range high, right? So there's a possibility that we can make it up all the way to the range high. But if I was shorting, I would actually want to wait over here, you know, to see if price can get back over here and have my stop above this area. Because I know this was really the last sort of lower high that we had before that big sell-off all the way back to 6,500. So technically, I mean, if I was shorting anywhere, it'd probably be up here, all right? Now, obviously, you know, people are making the argument that, you know, this descending trend line that I had right here, why can't this be the area that you want to short? I mean, like I said, you very well could, but given the extraordinary circumstances of that big player having all those longs, the lows being swept right here for extra liquidity, price moving up $1,000 in one day, TD9 buy signal. Um, you know, I would rather take the long direction on this, because I feel that the sentiment in the market is really bearish right now. And I think, as a big player, I would want to capitalize on that. I would want every person to sort of add fuel to the fire of my rally, so they keep shorting and shorting as, price slowly pushes up. That's how you cause these massive moves right here. Okay. These massive moves are not just done solely by one player. They're actually, in complement to other people who are closing out their short positions. They're getting liquidated, and this actually adds, the fuel to the fire, right? So that's kind of where I am. Okay. If you're taking profit on a long yesterday, where would you look to get back in? Where would I look to get back in? Scuba. So remember, like I said, in this area, the 4-hour time frame, that would be the big area that I'd want to see hold. Now, if you don't think, because I know Scuba Pro, you mentioned the fib right here being worked. So I think we're fairly close to that 382 right now. Yeah, we're bouncing off that 382. And by the way, in bullish sort of trending markets, right, or a bullish move, you don't want to sort of retrace lower than 382. You kind of want to get a nice quick retrace and boom, just push back and out. Okay, so statistically, I mean, again, this is probably a good area to potentially go long as well. Okay, and your stop will probably be just below this wick right here. But if you want to be a bit more patient, you can wait for that 4-hour demand structure right here, which is again around 69.50 down to about 68.50. The daily, has already tapped this area right here, which was sort of the last point before we sold off. So you could see this area right here, this candle, once we sold off, right, we pushed back up, and now we're testing that same area right here as support. And so we could just keep pushing back up. Okay, I hope that helped. Let's see what else we got. So my thought is to make decision of price direction on what best R is. So realistically, a stop loss at 78.82 is the right place to put a short. Then this makes the R unfavorable, and thus a long is more attractive as the low isn't so far away. I mean, the low is probably almost just as far as, where your stop would be, by the way. Just FYI. Like if you were targeting, well, yeah, I see what you're saying. Okay. I see what you're saying. So from 71.55, your stop is at a closer distance than if you were to long here, and your stop is down here. Okay, I see what you're saying. Yeah, you're right. I mean, statistically, a short position, a short position is probably favorable. Okay, but unless you have your short stop like up here, then it's not favorable. No, you didn't confuse the issue. I got what you're saying, Crypto Knight Clark. What you're basically saying is, if the stop was up here, the R is not favorable. And yes, you're right. But if the stop was over here, the R definitely would be favorable. But again, you'd then be fighting sort of, the trend of this $1,000 candle and potentially, movement, continuation movement back up. So yeah, I mean, that's, very possible. Okay, let me see if I have to cover anything else. Oh yeah, so let's take a look at the weekly, right? Let's see how the weekly is doing. Okay, so here's the weekly. I don't know how to hide this thing. So here's the weekly, okay? Notice right here, I mean, this is, a doji, right? I mean, it's nothing special, okay? It doesn't mean anything. It doesn't mean anything right here to have this doji right here. There's a very high possibility that, this thing could basically close as is by the end of the week at 71.50, which is the open of this candle right here. This weekly candle was around 71.07. Okay, so it's a very high possibility that it could close as a doji, and then we could continue back down. I mean, but personally, like I said, I don't think that there's, a player in the market that wants to sort of accumulate for the last 1 month on longs only to move up $1,000. I think the goal here is to sort of cause as much pain, inflict as much pain on the bears as possible. And I think the only way you can do that is probably start sweeping these highs right here. Once you start sweeping these highs around around this high right here, around 7,900 or so, I bet you there's going to be some massive panic in the market. Okay, and I don't think a lot of people will see this coming. Okay, so that might be the one area that if you really want to sort of get into a long or short, you could wait for the reaction in this area. Okay, I got into my long, I think like 68.50 or 6,800. I forgot exactly where I got in. Okay, yeah, about 68.80 or so. So yeah, I mean, my position is pretty good right now. I'm not too concerned. I mean, as you can see, I'm quite heavy in profit. Um, and here's the thing, folks. I could have definitely taken profit up here. Okay, it's very possible, right? And I, in hindsight is always 2020. And given the fact that I could say that right around 7,400 or so, I definitely saw sort of a bit of exhaustion and said, you know what, I could take profit here, but I think we're going to push higher, right? So yes, I could have taken profit and I could have rebought and I could have played the whole game of selling at the top, buying at the retrace, and then hoping for a move higher. But I'm already so well positioned that even if prices go down another, say, $100 or $200, I'm not overly concerned. Okay, and like I said, I'm a bit more confident in the structure of the market to sort of give me more bang for my buck for my long position if I'm just patient enough. Okay. If I'm wrong, I'm wrong, right? If I'm wrong, then, I'll probably just move my stop to break even or something. I mean, I'll see how the market reacts, but I'll probably move my stop to break even and just get out of the market and maybe, re enter long positions in this area right here. Okay. And by the way, my stop, for my long is below this demand block. Okay. So as you can see right there, right, the low of this candle right here is 64.40, 68.45, and my stop is 67.70, right? So about 50 or so dollars, $70 lower. So I know for sure that watching this demand block right here is going to be key anyway. So you could see, I'm already positioned in a way where I'm already reacting to those demand block. My stop is, well below this area, like somewhere down here. Okay. Um, I'm already sitting in heavy profit. I'm not overall concerned with, the structure of the market just being bearish again. Um, so I think my game plan, right? I mean, I've given enough um, confluence in terms of technical factors to give you guys an idea of why I'm still long. I mean, I personally don't think I'm sort of blindly long right now. If you think I am, I mean, take the other side of the trade, go for it. The people who took the other side of the trade yesterday, and thought this was the top, I mean, they're definitely looking healthy, right? I mean, your position is clearly in a lot of profit. So the point is now, I mean, are you going to close out your position here, or are you going to hope that it goes down here? Now, if you don't close out your position and say prices started to rally back up, you are going to be the fuel to my fire, for my long position. Okay. So really ask yourself, do you want to be caught in a long right here near support of this structure right here, right? And very close to that daily demand structure right here. Okay. So yeah, I mean, my game plan, guys. I'm fairly transparent in how I methodically look at the market. We got into a good position. I don't really think that I want to let go my long position just yet. I think I also said sort of a bold statement, and I want you guys to take this with a grain of salt, and also, not take it as investment advice. But I think there will probably be more money made in the next couple of days in this market than probably the entire year of 2019 if you just play your cards right. Okay, if you're not FOMOing into position and if you're not going too heavy and high leverage, you will make good money. All right, but if you do sort of, you know, FOMO into the market and you go heavier than you should, or you're very high leverage, chances are you'll probably lose money. And you'll probably hand back that money to that big player that I showed you earlier who's collecting those longs anyway. Okay, so really ask yourself, how do you want to play this? Now, I've already laid out my case in Bitcoin analysis. I've laid out my case right here from yesterday's update. Please go read this. Everything that I spoke about right now is in complement and in addition to what I've stated here and what I've stated here in this channel. Okay, so go check that out. Build your case for whatever bias that you have, whether it's short or long, but you know which way I'm positioned. And I think that's it. Let's see here. Okay, looks like we got back to the long-term trend line, or we're bouncing off of it. Let's see. I'll open this link up. Hopefully this isn't a virus. Yeah, long-term trend line. Yep. I mean, yeah, it's pretty close to it, but yeah, I see what you're saying. Definitely a long-term trend line. We hit that, and yeah, we should be pushing back up. I mean, that's again another case being built, right? For long versus short. Okay, and this is obviously a big sort of macro fundamental or macro technical factor. I think I have this trend line on a different chart. I haven't even looked at it, but yeah, good thinking. Positive vector. I think that's obviously another reason why you could have another confluence factor on a weekly time frame telling you that, hey, this could be potentially an area to consider longs. Okay. So I think that's pretty much it. I'm gonna open up the floor to questions for the next 5 to 10 minutes. If you don't have any questions, I'll wrap this up and call it a night. All right, so any questions so far, folks? Has the analysis been clear? I mean, did you understand? Okay, this was awesome. Thanks. Yep, you're welcome. You're welcome. MACD. Yeah, I mean, I think MACD is, by the way, remember MACD is a lagging indicator. Okay. But yeah, I'll look at the MACD. Let's see where the MACD is. Okay, so this is the MACD. This is a Stochh RSI, just FYI. Okay. By the way, even over here, Stochh RSI has a good amount of room to run on the daily. This is not even anywhere close to tapped out, right? And yeah, so anyway, this is the MACD. Okay, so if you actually, what the funny thing is, if you watch my video from maybe 2 days ago or 3 days ago, I think it was the evening update, I said before that Bitcoin likes doing sort of these, double sweeps like this and then pushing up higher. Okay, so guess what? Okay, we made a sweep right there, came back around, made another sweep right there, and now I think we're going to push up even higher. Okay, this is something that's very common just in the MACD sweeps of assets, and the reason it happens, again, this is because MACD is a lagging indicator. It does these double sweeps because first time around it does a sweep because it thinks that, okay, a bottom has been cemented, but really what happens is the market sort of creates a bottom right here, pushes up, and then comes back around, takes out those stops, right, and heads lower, and then starts pushing back up. And so this is really your real sort of bullish MACD cross that you need to look for, the second sweep. Okay, so notice right here, I mean, this was the first sweep, turns back around, second sweep right there, comes back around right there, right? And so now I'm expecting the MACD to push higher, kind of like it did over here, okay? Or first sweep, second sweep, and then push up, right? So yeah, I mean, MACD is looking good on the daily, on the 4-hour, let's see where it is. You know, histogram is climbing. I mean, actually it's hitting very close to where this area, you know, when we, I guess this area right here. I'm very far away from this, you know, high of the MACD right here when we had that big sort of bullish move. So yeah, I mean, even MACD, you know, has had its bull cross right here in the 4-hour time frame. Histogram starting to climb. 4-hour Stochh RSI was into overbought, so it could cool off a little bit and then push back up. Let's see here. Awesome. Could you please go through funding, longs pay shorts, or shorts pay longs? I don't really know. Oh, actually, no. I think I have the indicators somewhere. Let's see here. This is the hash ribbons, by the way. Remember, like I said, I still do expect more capitulation to the downside, but you know, as for now, this is probably a temporary bottom. Okay. Anyway, funding, right? So let me see if I have enough indicators here. Let's see here. I'm gonna close this out. There. Yeah, so the thing about TradingView is it won't let me have more than 7 indicators per chart. I don't really know. I feel like I have the highest subscription, but these people just want to make you pay more and more, you know. Funding. It's called BitMEX funding. Where'd it go? I think this is the one. Okay. Okay, so this implies right here negative funding, right? So the negative funding is longs pay shorts. Okay, correct me if I'm wrong. I'm so confused right now because I typically look at Bybit, and then I get to see exactly how the funding is. And you could see, you know, and I think Bybit or BitMEX, one of the exchanges, it clearly lays out who's paying who. So I'm actually a little bit confused right now. But I'm pretty sure right now the longs are paying the shorts in this negative funding environment. And over here, shorts were paying the longs. Over here, the switch. I think there's a better indicator for this. This doesn't really help. I forget which indicator it was. But yeah, Crypto Night Clark, let me find the other indicator after my video, and I'll get back to you, okay? Could you go through? Okay. What is that? Neobutane. I mean, neobutane is just the creator of the indicators. Right now, it's negative. The funding is negative, just FYI. But I'll explain it a little bit later. I'm actually confused myself because this indicator doesn't really help me understand properly. There's a better indicator by someone that clearly lays out, you know, who's paying who. And this is, you know, this even here, I can't even I can barely see exactly what's happening. If this is long, because then you have these blue histogram things poking up past the 0. So I don't know if what's happening. Okay. But yeah, anyway, I hope this session has been helpful. But yeah, if you guys don't have any more questions, folks, I'm going to wrap it up, call it a night, and hope you guys have a wonderful, wonderful, you know, day ahead. And kudos to you again if you made some good profits in the long position, or, you know, if you traded on the opposite side of me and you took the short right here with Jordan's sort of, you know, top call, please leave us a gains review right here. I'd really appreciate it. All right. Thank you so much again, everyone. And I will talk to y'all soon. And as always, you know, always shoot me a message if you have any questions, or just tag me in here and I'll try to get back to you guys as soon as possible. But yeah, take care and chat soon. All right.